Hey, this is Tom, and we just got some breaking news about the stock market. Some mind-blowing news for the rest of 2024. Very interesting stuff. Now, for me to explain to you what I'm talking about, I gotta share a little joke with you that I heard when I was a kid. Basically, the joke is about a guy who had a dog. The dog was feeling bad. They called the vet. Vet comes in, takes out a syringe, and basically injects the dog. And the guy says, "What did you put in my dog?" He says, "It's a little bit of gasoline, don't worry." And the guy says, "What are you talking about? Gasoline inside the dog? You're going to kill my dog." And then the vet says, "Don't worry. I know what I'm doing." The dog wakes up, starts running around like it's perfectly fine. Runs around for 5 to 7 minutes. All of a sudden, drops to the floor. And the guy looks at the vet, says, "What happened?" And the vet looks at him and says, "Well, he ran out of gasoline." Now, that's a joke. That's a joke. Don't cancel me. I'm a dog lover. Obviously, that's just a joke. But after what happened yesterday, when the market took itself into the toilet, everybody's wondering, every single investor, trader, everybody's wondering, is this the top? Have we as a market ran out of gasoline? And this might be the beginning of the decline. We got such a huge run. Maybe this is the top, right? And everybody's wondering, everybody's curious. Nobody really knows. And yesterday, Tom Lee, one of the best in the business, went on TV and said this.
You said immediately, there's some dry powder left. It's not over yet, although there are some signs of fatigue.
Yes, I mean, we've rallied 16 weeks, up 23%. The last two sort of long rallies were 16 to 19 weeks and 21 to 22%. So it's mature, but we don't see the signs of the top. Normally, like margin debt is only $700 billion. It was $900 billion in October 21, and there's still $6 trillion of cash on the sideline, and I think that would sort of help us get some more juice on the upside from here.
What he's saying here is very simple. He says that he can't see the top yet for this market. Now, I get where he's coming from. He's talking about the fact that we basically just now getting back to late 2021 levels when the S&P 500 was 4,800. We're currently at 5,000. So we really just corrected back. I also see the GDP numbers, the inflation numbers, all the macro data coming in strong. I totally understand where he's coming from. He's talking about a little bit of fatigue. Sure, after a long run, market corrects. That's fine. Normal course of business. But he also brought up a point which I think does not get brought enough, which is there's still $6 trillion on the sideline waiting to get deployed. Now, that kind of money can move the market a lot higher than it is right now. So that's another strong argument. Now, there's definitely more juice in the market. I agree with Tom Lee, but I've also made a point yesterday, which I think that you should listen to, which is, hey, even if the market goes up, that's great. But what happens if the entire market goes into the toilet? You can't just rely on the optimism of Tom Lee and on the bullishness of guys like Tom Lee and just hope for the best. What happens if Tom Lee is wrong? I've made this video yesterday where I explained how to invest in this environment, which is all-time highs and a lot of uncertainty, right? So Tom Lee was asked about that specific thing. He got asked, hey, Tom, should people right now stay 100% in cash? Should they go all in? What should they do? And Tom's answer is a masterclass in smart investing. Check this out.
Well, I think there's going to be a moment where investors have to get cautious.
So I guess the question is, for those folks who are sitting around with cash right now, what would you be doing with your money if you knew things were about to get worse and not better?
Well, we know markets have a pretty good 12-month runway from here, and I don't think investors should be 100% cash. I think if they have been sitting on cash and missed a lot of this 24% move, I think they need to dollar cost average. Put a little bit in on weakness, and this has been a kind of a weak week. And then just be patient. I think patient money is really the money that's been working the last few years.
Now, he didn't take long here, but in a few seconds, he actually spoke the truth, spoke facts, which is dollar cost average into weakness. Do not be 100% in anything, not in cash, not in stocks. Slowly DCA into good companies and DCA a little bit faster when there's weakness. 100%. Could not agree more. And then he also adds on top of it, which is patient money always wins. 100%. And it's not me saying that. It's not Tom Lee saying that. It literally, the GOAT, Warren Buffett, says it. Warren Buffett literally told you this. The stock market is a transfer mechanism of money from the impatient to the patient investors. As simple as that. Which explains how in the world I completely got 2023 wrong from a macro perspective, thinking it's going to have a horrible year, a crash. And then 8 out of the 9 stocks I made videos on saying I like these stocks went up on an average of 80%, and how my own portfolio did a lot with Palantir, Tesla, and the S&P 500 because I'm patient. I don't jerk around. And when I think times are good, times are bad, I still DCA and I'm being patient. Simple as that.
You think that we will get some rate cuts this year?
Yes. And, I think, again, I know the statistics don't show it, but I think the job market has weakened a lot. One of the big drivers of inflation for the past 8 months has been auto insurance, up 23%. I'm not sure monetary policy really gets auto insurance rates down. It just has to play out. And, housing is starting to really come out the other side so we can get lower inflation.
Is it still get a soft landing, or is it getting harder?
I think the economy's actually stabilizing. And then if we get lower interest rates, it actually really stabilizes the economy. Yes, I think there are some difficult seasonals because, companies raised prices in January. That made January look like a hot CPI number. And I think February CPI, which comes out next month, is going to reverse some of that. And it's going to put investors in the bond market thinking inflation is falling again.
Now, what Tom Lee is saying here makes a lot of sense. Look, the Federal Reserve will drive the bus. If they lower rates, the economy is going to benefit. Economy is going to benefit. The stock market is going to benefit. As simple as that. If the Federal Reserve decides to throw a monkey wrench into this thing called the economy, then the stock market will suffer. And no amount of predicting or thinking about it or conjecture, nothing will help. So at the end of the day, we're all subject to the decisions of the Federal Reserve. So yeah, even Tom Lee, who's a huge bull, isn't saying 100% anything. He doesn't know for sure. Neither do I. Nobody has a crystal ball. Unless you can come up with a DeLorean with 1.21 gigawatts, we don't know. And that's exactly the point I've been making here. Look, if you want to learn how to get great returns, even if you completely screw up the macro prediction like I did in 2023, you can do 3 things. Number 1, join our academy, patreon.com/Tom Nash. Number 2, get a tool that helps you research like Stock MVP, stock-mvp.com, 1 week free to try. And number 3, join our free Discord, discord.gg/Tom Nash. Would love to see you there. Thank you so much. Short video today. Hope you enjoyed it. See you in the next one.